Hey everyone, welcome back to Corporate Decoder. Today HTZ just filed Form 8K regarding warrant adjustments, and I am seeing something that affects shareholder value. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is adjusting how many shares warrant holders can get for their warrants and at what price, and this is important because it shows the impact of a recent debt issuance. So, Hertz Global Holdings, Inc. and its subsidiary the Hertz Corporation have had to make some changes to their outstanding warrants. This usually happens when the company issues new debt or stock, which can affect the value of existing warrants. The main event here is tied to the issuance of about $380 million in new notes back in June and July of 2026. These are called Exchangeable Senior First Line Secured PIK Notes due 2030. Now, when a company takes on new debt like this, especially debt that can be exchanged for stock, it can have a dilutive effect on existing shareholders and warrant holders. Dilutive means it can potentially reduce the ownership percentage of existing holders if more shares are issued later. Because of this new debt, an anti-dilution clause in the agreement for the company's public warrants kicked in. Think of an anti-dilution clause as a safety net for warrant holders. It is designed to protect them from having their investment lose value if the company issues new securities at a lower price or in a way that could unfairly harm them. This clause basically says that if certain events happen, like this big debt issuance, the terms of the warrants need to be adjusted, and that is exactly what has happened here. Specifically, the exercise price for these public warrants has gone down. It decreased from $13.61 to $12.81 per S-share. This is good for warrant holders because it means they can now buy shares at a cheaper price. With this change in exercise price, the number of shares a warrant holder gets also changed. It increased from about 1.014 shares of common stock per warrant to about 1.077 shares of common stock per warrant. So for every warrant they hold, people can now get more shares of the company's stock when they decide to exercise those warrants. This adjustment is a direct consequence of the company trying to raise capital through debt, specifically these exchangeable notes. It is a way for the company to manage its financial obligations and growth plans while trying to keep its existing warrant holders from being unfairly disadvantaged. Looking at the broader picture, Hertz has had some ups and downs recently. We've seen news about share offerings at prices that have caused their stock to decline and concerns about warrant prices slipping. This latest filing shows the intricate financial maneuvers a company undertakes to balance its debt and equity. The fact that an anti-dilution provision was triggered signals that the company's recent financing activities are significant enough to alter the value proposition for warrant holders. It is a signal that management is actively managing the balance sheet, but it also highlights the ongoing financial pressures or strategies the company is employing. Overall, what this filing tells us is that the company is adjusting its capital structure in response to new debt. For warrant holders, this means they can now acquire shares at a lower price and get slightly more shares for each warrant they hold. It's a bit of a win for them, ensuring their investment is protected against dilution from the company's recent debt, heavy financing. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.